Chinese imports, big deceleration.
Ooh.
Goes to internal Chinese demand, but went from 7.2% year over year to 0.5%. And then Japan machine tool orders, which obviously are a proxy for capex in Japan's factories, big deceleration, 8.9% to negative 3.5% year over year. So a lot of what the signals front ran to legally to an extent is now
legally
now coming out in the data.
By the way, on that, let's just show slide 155, Ethan. The problem with China, in addition to that, is that the base effects are getting tougher. So the data was already slowing into easier base effects. So the 1 year comparative base effect steepens through the rest of the year. That, just take my word for it, is a very big problem. But this is not. These things, Jonesy, that you just said are not like new things. Go to slide 150. You just showed slide 156 on the PMIs. That's kind of boring. But I think the slide 157 on what's going on with housing in China. I mean,
yep.
Housing and consumer confidence. I mean, so when Jonesy gives those updates, did you or did you not? Let's just try. Did you or did you not know where that was on the sine curve? I did. I'm going to show you right now because I have the charts. I'm a charts guy. Not a charts guy, really, but this number going to new cycle lows. Should that surprise anyone? By the way, these are years. This is not months. Okay, this is 2024. You take where these guys are slowing today, you'd have to go all the way back there on home prices. Okay, go to the next slide on consumer confidence. Would that make a consumer in China more or less confident? Of course, it makes it an unconfident consumer. Imagine living in China. This is your confidence level. Like this is nowhere in this chart, by the way. This goes back to 2008 financial crisis. China, as a consuming country, was building confidence all the way up until here. Then you had the pandemic hit. Then they took another zip up here. But since then, this is a moment in time, Jonesy, for these Chinese people.
Yep.
They're fucked. Like right fucked. I mean that is a very technical term. Now this looks, actually I shouldn't say, doesn't look like Japan. It looks like China. But there's this place called Japan that went past their peak and couldn't come out of it. And they had to devalue, they had to buy back basically half their stock market or whatever, certainly buy all their Japanese government bonds. The biggest incremental importer of oil is who? China.
Yep.
We just showed you China is an unequivocal disaster.
Yeah. From
a demand perspective, a confidence perspective, across the board. By the way, just go back to actually I can do China right here. China is slowing in our model to 3.4%, 3.46% growth. These guys have rarely, if ever, stated a number below 5. They probably won't state these threes because they lie. They make up the numbers, right? The Chinese numbers have always been made up. Apples to apples, they're made up against made up numbers, so we can still model it. But this is one of the many reasons. If you go to a global CIO, if I go to, rest in peace, David Swenson's office, he would never take a meeting with me. But if I went to him and I said, Swensey, buds, I know you like Yale hockey, buds. Why aren't you long India instead of China? Just straight up, it's got more than double the growth rate. And one, in China's case, is slowing and India's accelerating. Why? If people in that position, again, David Swenson did a fantastic job for a long time, but the future of endowments, the future of long-term money, the future of pension fund accounts should be very well aware of these things, number one. And two, most importantly, wait on it, held to account. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.